Dear students, this video will look at budgeting, capital budgeting to be exact. It's not necessarily the most exciting thing to do, but without a budget, you might just lose all your money. So in order to be efficient with your money, you have to have a good capital budget, and this video will help you with that. This video will cover international capital budgeting and discounted cash flow. When it comes to discounted cash flows, there's lots of different equations. So you have to ask the organization that you work for how they like to do it at their place. When it comes to discounted cash flow, you can go very simple, or you can go really crazy on all the parts that you want to incorporate in that risk calculation. Now, the basics of net cash flow equations, or net present value, is that you take the cash flow and you divide that with a risk premium. I like to call the discounted cash flow a Barbie doll, because you can hang on all kinds of cool stuff on it. So here you have the risk premium. You can have it to the power of, depending on how many time periods you have. You can have it growing, you can have it, so an example here, you would have like a cash outflow, for example, and that would represent your investment in a new project. And then of that investment, you expect positive cash flows coming in, and then you can add those on the back end. Now let's look at a more simple example. Here you have $1,000 investment, and then you get these different cash flows in different years. In this case, you have the interest rate being 10%, and when you discount all these cash flows, you get a net present value of a negative $56, which means that you will not take on that project. You should always take on positive projects. Here's an example of how you would actually put it up when you discount the $125 and the $250 and $375 and so on. So the first time you will actually discount the $125 by 1.10, and that will be the 1 plus 10%. Here you will add to the power 2 because it's 2 years, and the 3 years and 4 years, and so on. And you can continue to do this and then calculate the value of the project. And because in this case you're actually doing the calculation and doing the after-tax comparability to it, because you have to add tax on your project and see if that adds value to you as well. And so in some cases, if you finance with debt, you'll get a different result. That's why you have to look at the different types of ways of financing a project. Adding the international finance part of it, you can decide, should you invest in a project and actually have the money invested in US dollars and then exchange it in the forward market, or should you buy the spot market today and invest that money in the futures in a foreign market, and then simply decide how to handle it. So the decision is, in some cases, that you have an investment and you either need to pay it in US dollars right now, and therefore exchange it at the spot rate, or you exchange it at the forward rate. But you can also invest and have the money invested in, for example, the United States, and then buy the forward rate and peg that future part. So in this case, you could use something like, you have the initial investment. It's going to cost you a bunch of money in 6 months or something like that, and you know it's going to have a bunch of cash flow coming from that. And here you would have the cash flow times, and if it's growing, assuming that you're growing this cash flow year over year, then you need to add that on. So for international projects, you have to decide when to convert the US dollar to a foreign currency to pay for a project. So here's a simple list of how you can make decisions. 1, you estimate the future cash flows in a foreign currency, convert to the home currency at the predicted exchange rate. That's probably the spot rate, and then calculate the net present value for that using the home base capital, the currency. Another way of doing it is to estimate the future cash flows in a foreign currency, estimate the foreign currency discount rate, calculate the foreign currency net present value using a foreign cost of capital, then translate that, probably using the forward rate or the spot rate, depending on when that event actually happens, and then see what net present value is. Then you will compare the two different calculations. You have two equally valuable approaches here. One is that you're changing the foreign cash flow into US dollars at the exchange rate expected to prevail, and find the net present value using the dollar cost of capital. Or you can find the foreign currency net present value using the foreign currency cost of capital, translate that back into US dollars at the spot rate, and figure it out that way, and then compare the two projects. Remember, you have to be very careful when you round everything. So you don't want to round any numbers until the very end. Otherwise, you might get a completely wrong answer, and it might be misleading. Either way, you need to be consistent when you do the calculations. Just make your decision and then move on. The application of options pricing theory to the evolution of investment options is real projects is known as real options. One thing that you need to pay attention to is timing. Option is an option when to make the investment. A growing option is an option that increases the scale of the investments. A suspension option is an option to temporarily cease production. Very commonly done in the oil industry, where they kind of say, okay, the oil price is so low right now, we're going to just shut production and furlough the employees that are working that oil well or that refinery. The last and maybe the saddest part is when you completely need to abandon an option, and that's to quit the investment early and just write off the debt as a bad idea. Remember that price is what you pay, and you don't lose any money until you exit. Likewise, you don't make any money unless you take on the risk. Dear students, I hope you liked this video. If you did, please subscribe by clicking up here, and give me and maybe even write a little comment down below. So I appreciate your help and your support, and I hope you enjoy these videos on finance.